John David Rainey, Walmart CFO. Good to see you in person for a change. You're always coming to us remote from some studio here in Bentonville.
It's great to see you, Brian. Thanks for being here.
Well, congrats on winning the Company of the Year award. I mean, that is it's a high honor from Yahoo Finance.
Well, we feel very fortunate. We've had a good year, and it's good that the investor community has recognized some of the progress that we've made as well.
I originally met you at PayPal when you were the CFO of PayPal. You joined here, now, over 2 years?
2.5 years.
This is a much larger company, man. I mean, before we get into the numbers and nitty gritty, what is the day in your life as the CFO of Walmart?
Yeah, well, first, I feel like I've got to get used to having 3 extra zeros on everything. It is a big company, and people told me, can you handle the scale? And yeah, I've got this, but it's humbling because in many ways, it's like running a lot of different companies. We're the largest seller of food in the world, obviously, but we're also one of the largest gas stations in the world, one of the largest pharmacies in the world. We have a financial services business, and it's really important to think about how I spend my time because you could get lost in any one of those areas.
How do you spend your time?
Yeah. Well, it's more at an enterprise level, and it's things like capital and resource allocation. I spend a lot of time with the investor community because I do think that for a period of time, our narrative wasn't landing with Wall Street. The path that we were on, the progress that we were making wasn't being appreciated as much. And so you always think about what your highest and best use is at any point in time. But I felt like when I came to Walmart, I needed to spend a lot of time on Wall Street. Needed to make sure that they understood our strategy and understood what we're doing and where we're going. And fortunately, you can tell by virtue of this recognition that you all are giving us, I think that has landed pretty well.
You're stock up, I believe, over 60% year to date. What do you think, when you started, what do you think Walmart, or what do you think Wall Street wasn't getting?
Yeah, well, first of all, I think anytime you make a decision to join a company, the person that's making that decision is sort of doing their own investment thesis on the company. And I always say this, but one should be so fortunate to be able to work for a company that they'd also want to invest in. And the more that I learned about Walmart and where they're going, I just felt like they have all the tools in place. They've made all the investment to be really successful here. And to be clear, be successful on a digital journey where they've been more brick and mortar historically. I think one of the things about that, if you and I developed a great technology app, the thing that we would be worried about is customer acquisition. And what Walmart had already was a great brand and hundreds of millions of customers that were shopping each week there. And they were simply now allowing them to shop in ways that customers wanted to do through digital channels. And so I felt like the biggest impediments for most companies, they had already solved for. And all the tools were in place, and you're seeing that actually play out right now.
So I interviewed Doug McMillon, of course, the CEO of Walmart, and he said one of the reasons, among many reasons why he hired you, is because you were a person of really great character. Very nice compliment from Doug. But you were from the outside of the company. Was it hard to make friends? Was it hard to be welcomed into this community that Walmart, where a lot of people do get promoted from within?
Yeah. I'm the first CFO, I believe, in over 2 decades that was hired from outside the company. And I have to admit that when I first started, I thought there's a lot of eyes on me, who is this new guy? And it's humbling to come to a company as large as Walmart with such a great history and such knowledge of retail that I didn't really have. But Doug didn't hire me to be an expert in retail. I have people working for me that I'll never know as much about retail as they do. My job was to help with the strategy, help with what we're doing from an enterprise perspective, help with financial operations. And the culture here really embraced me. For a company that has been as successful as Walmart, you would think that they would be a little more certain in the path that they're taking and not so open to an outside perspective. And I came here, and that's what happened. They welcomed me. They wanted my objectivity to things and the path that they're on.
So you were also the CFO of United Airlines?
I was.
I was joking to you off. Wait, you're 25 years old, and you're the CFO of
a little bit older, but
okay.
Yeah.
So United Airlines, you're CFO, PayPal CFO, now CFO at Walmart. What skills?
Yeah.
What did you learn at United and PayPal that you've brought to the table here at Walmart?
It's a great question. So I joke that if you had created a CFO in a petri dish, something like my background might be what Walmart needed. Insofar as I came from airlines, which is an even lower margin than retail,
If there is a margin.
Yes, exactly. And then a fast growth digital business like PayPal, and combining both of those experiences really fit well at Walmart. I can remember at PayPal at United one time, I took a trip with my family to Hawaii. We were sitting in first class, and through the course of that flight, I was served food and got 18 different pieces of silverware. And I landed, and of course, jet fuel is one of your largest expenses in the airline business. I'm like,
this is crazy.
What if we serve 4 pieces of silverware? What would be the fuel savings because of the weight of that? It was $1 million a year just on that one flight.
Just from silverware.
Yeah, and so it shows you like how thin the margins were in that business. And I'll remind you, like I was in the airline business at 9/11, which is a very impactful time for anybody that was in the business. But it's not as if the decade after that got much easier. The best year in the airline business in the 10 years that followed 9/11, airlines made money on the last 2 people that walked onto every airplane. Now that oversimplifies the math, but that's effectively what it was. And so you go from that environment to PayPal, which was growing 20% plus a year, had 20% plus margins, adding hundreds of millions of customers, and then bringing both those perspectives to Walmart. I leverage both those skills every single day.
You mentioned the silverware. Is it hard to find cost savings in a Walmart model where, this company has been founded on doing things super efficiently.
Everyday low
Where do you
cost,
find extra silverware in the Walmart business model?
Well, I tell people as a CFO, I focus on big numbers and little numbers that you multiply by big numbers. And everything at Walmart, you're multiplying by big numbers. And so we do have a culture of what we call EDLC, everyday low cost, and we do that to provide everyday low prices to our customers. But like every company, we have opportunity. We can look at opportunities in procurement, buying corrugate or cardboard or things like that, and leveraging our scale to get better pricing there. We have inefficiencies just like every company, but that's the journey that we're on. And we've talked about publicly getting to a target of 20% sales, general, and administrative costs as a percent of our revenue. We're not there yet, but I'm hopeful that with all the teams working on this, we eventually will.
I put this question to Doug, but I'll put it to you as well. It seems like, and in part why you won this award this year, so your sales have been, through the roof, stock price through the roof, operating profits really strong on a company this scale, inventory, it's not even
really good shape.
Really good shape. Like, what has been the unlock this year? Like, as you look at through the financials of a Walmart, did something click?
Yeah, so it didn't happen by accident. It's not an accident that we're almost 20% of our business is e-commerce now. It's not an accident that we're gaining share, and that's mostly coming from households that make more than $100,000 a year. It's not an accident that we delivered over 4 billion items in the last year, same day or next day. This is a part of our strategy. And what you're seeing right now is all the pieces of this strategy beginning to come together. And it's coming together in a way where between this year and next year, we'll grow operating income about 10% on average each year.
Can this continue?
I
Like,
think
I'm trying to figure out like what slows things down on Walmart? Is it the only thing that could slow it down is the economy?
I even think then we're somewhat insulated, because when the economy gets more challenging for consumers, they come to us for value. And we're the company that provides everyday low prices. But what's different now, we've talked about this in the past, we're also known for convenience. So I think we're a company that wins in any type of economic environment. And I really don't see an end to this. So like, our business model is changing. What we're doing now is growing in these digital channels that is unlocking like new revenue streams for us. Things like advertising, fulfillment services, data monetization, all which have higher margins. And so you've got this core retail business that is growing at, call it GDP, low margin, but all these other businesses that are growing at 20 to 30 to 40% a year that are much higher margin than that, the margins in our business want to go up.
Does Wall Street get it now? And I ask that because, a lot of the analysts that cover Walmart have been doing it for 15, 20 years, in some cases even longer. Do they still think of you as a store-first company? Do they understand the tech component or that flywheel that's happening now?
I actually think, Brian, in the last quarter, maybe 2 quarters, you've seen this flip. And maybe the best evidence of this is in our PE multiple. It's increased from something like 20, 22 to above 30 right now, which to me, PE multiples are a function of growth and certainty.
You're almost on par with NVIDIA. According to Yahoo Finance data, if you want to go forward, PE multiples, I can talk this language.
But I think investors now recognize that not only are we growing in these channels, but this this earnings stream that we have is more durable and more certain into the future. In fact, the perpetuity value of Walmart is much higher than what it once was. And so investors are getting it, absolutely.
Does the online business make money?
Parts of it do. So for example, Sam's today makes money. We have international segments that make money. Walmart US is getting really close, but this is not something I'm worried about. It's no longer a question of if, it's a matter of when. And there may be a period of time where we make money and then we invest a little bit more and then it begins to lose money, but that all the pieces are in place to do that. And there's a couple things that are contributing to that. One is we talk about this densification of our network. When you deliver a package to one house on a street versus 5 houses on a street, you're spreading those costs over more volume. And we're seeing that densification of our network. Just in the most recent quarter, what we call batch density, which is the number of packages per delivery, has gone up 20%. So we're getting much better there. The other thing that we're seeing is consumers' willingness to actually pay for expedited delivery. So of orders that
one of them.
Me too. I love it. I actually have a game with my wife where she'll go to the store and I'll try to order it online and see which one gets to my house first.
That's actually good.
But what we're seeing is that fully 30% of customer orders from one of our stores, someone is willing to pay for to have expedited delivery within an hour or within 3 hours.
Why, and maybe this is part of the narrative change, but before you arrived, I never heard Walmart talk about upper income households. I mean, this was never on a financial statement. This was never on a slide deck. Did you start putting that in there? And then why do you think upper income households are coming to Walmart?
Yeah, well, I'd love to sit here and tell you that this was very, very deliberate. We certainly wanted it, but it actually, in some ways, kind of happened to us too. We didn't realize, or we're realizing right now, is by being more convenient to customers, that appeals to all households, irrespective of what your paycheck is or how much money you're bringing in each month. And convenience really matters. Everybody wants to have that immediacy when they order something, and we've just gotten much better there. And as I think about like commerce going forward, the way that we shop today is very different than it was 20 years ago, and it'll probably be very different 20 years from now. But the one thing that will be a constant there is we still have to get a good to a consumer. And so the investments that we're making in our supply chain, I have a high degree of confidence. And that's a durable investment that's always going to make sense for us to do, because you're always going to have to get that package to that customer.
Another way of looking at it is that other retailers they're just not getting the job done.
Well, I can't speak for other retailers, but what I can say is when I look at the billions of dollars of costs that it makes
You're doing something right.
Well,
like really right.
Well, so I'll say this. This is something that I didn't appreciate when I came to Walmart. I was more fixated on some of the shinier objects, the things that were higher margin, advertising, things like that. But what I've learned in my 2.5 years here is how important it is to be really good at retail. And the team at Walmart, they're the best in the business at that. They have 62 years of experience doing that, and I would argue they do it as well as anyone in the world.
How disruptive would tariffs be to what you do?
Well, we certainly don't want them, because we want lower prices for our customers, but we've lived in a tariff environment for 7 years now. We'll work with our suppliers and through our own private brand assortment to try to bring down prices, but tariffs are going to be inflationary for customers.
Is there a way to keep prices low if they do go into effect? Like where else can you find savings?
Yeah, well, one of the things that we've been focused on for years is diversifying our supply chain. Irrespective of what company or country we're talking about, it's good to have that surety of supply. So if it's all speculative, we'll have to see where tariffs are applied and what the percentages are, but we can also often look to source something from a different area, which may be where a tariff is not applied.
How does the CFO of Walmart think about tariffs? Would they be disruptive to how you do business next year?
I think disruptive is a strong term. It's not something that we're unfamiliar with. As I said, we've been living in that environment, but what we want fundamentally is lower prices for our customers. And that's going the opposite direction. So we've got to work hard to figure out ways to bring down prices so that it's not as inflationary as what it would be just on the surface.
What are you seeing with households who don't make $100,000? I pull 50,000 and under.
Mm-hmm.
How have they been shopping more recently?
Yeah. There's been several quarters now where you've seen that dollars are stretched. Pocketbooks are stretched more as food prices have gone up. I think they're up over 20% versus
Egg prices
pre-pandemic.
are still high. I was walking the store, I was $5.40 for a dozen eggs. I'm just trying to get my protein, man.
Yeah, that is the thing that is still a real sore point. but they're spending more of their money on food. And so there's less money in their wallet to go to these discretionary items like general merchandise. If we look at the mix of our business between general merchandise, health and wellness, and grocery, general merchandise is down about 100 basis points year over year. And so consumers are being choiceful, they're being discerning in those purchases, but they're still spending. It's not as if we've seen a stop in spending.
Where do you see, do you see any relief in food prices coming?
They've actually been better. On a year-over-year basis, it's been much better than it was 12 months ago. Eggs is an example, though dairy would be another one where we just see that there's still a little, there are factors that contribute to this, avian flu and things like that, that are more specific to those products. But generally speaking, food prices are a lot more normalized right now than where they were at this time last year.
As you look back at the business over the past year, is there something that surprised you on how the business has performed compared to when you were coming into this year?
Yeah, the thing that has surprised me the most is how important convenience is. I talked about the fact that we've got 30% of our customers that are willing to pay something more to have this expedited delivery. That has surprised me, the number of customers that have been willing to take advantage of that. If you had asked me to make an estimate about what percentage that would be, it would not have been 30%.
What does the membership look like for Walmart Plus? How's that doing?
Membership is doing great. Members are finding utility and the ability to pay a small fee each month and get that free delivery. And that actually, maybe surprisingly, spreads across all income cohorts. And if you think about it, like some lower income cohorts, they may have to take public transportation to go to the grocery store or not have a car. And being able to have that delivered to your house, there's a lot of utility and value in that.
I've been asking a lot of leaders like this, and we talked a little bit about it with Doug, like Gen AI. Do you have a separate line item on your sheets? Like, this is going to be the Gen AI investment for the next 5 years.
Yeah, we actually, within finance we do, but broadly.
You want to share it?
Well, there's a lot of back office type, more mundane rote tasks that you can automate, and we're doing some of that today. But aside from AI, technology investment is something that is really important for us, and I think fundamentally different than a lot of other customers. The area that I like to point to on technology is what we're actually doing in our Sam's Club. And so you're familiar, I think, with Scan and Go.
Yeah, scan it, put it in the basket, and now what? I can just leave the store.
You walk out under these exit arches without ever going through a checkout. The interesting thing about this is those customers that use Scan and Go, first of all, the NPS is 90. I'm not aware of a lot of other products where there's
nobody wants to talk to anybody, John David. We respect the cashier gig, but we just want to get out of the store.
That is actually really true. When I was at Continental Airlines in the late 90s, is right when you had these websites that were coming out where you could buy tickets online. We ran this billboard at Continental that said continental.com, because we don't want to talk to you either. And it was a little cheeky. We ended up taking it down within a day or two, but there's some truth to that. Yeah. If they could have a frictionless way to handle it themselves, they would much rather do that. And so you're seeing that today. But at Sam's Club, the interesting thing about those customers or members that use Scan and Go, they spend 3 times what someone who is not digitally engaged is, and the renewal rate is 800 basis points higher.
Well, let's stay on Sam's Club. Yeah. Before we let you go, Sam's Club, why is Sam's Club doing so well?
Yeah, well, it's interesting that the generation or the age group that we get the most membership growth from right now is Gen Z and millennials. And I think they're looking for value too.
They don't even own homes. Where are they putting these bulk mustard, like mayonnaise? They have no
it's quite interesting, but they're looking for that value. And what's different about Sam's Club is with our Members Mark brand, which is roughly about 40% of the units that we sell, there's great value there. And it's not just low prices, but it's very high quality items as well.
There's a lot of competition in the warehouse space. How do you explain Sam's Club, Costco, even BJ's also? What is it about that model right now that's working for the industry?
I think in part because pocketbooks are stretched. People are looking for those items that are, if they can buy more of something and get it at a lower overall price. It's hard to find a lower price anywhere in America than you can at Sam's Club. We basically are making all of our income in the membership fee itself.
Have you been surprised by the international strength for the company?
International has been, I think, one of the underappreciated parts of our business. In the most recent quarter, we grew revenue double digits, grew operating income even more than we did revenue. So it's been really good. And we have a diversified portfolio there. Mexico is probably the biggest part of our international business, but some of the faster growing ones are China and India.
You have, what, 50 Sam's Clubs in China now?
Yeah, and they're doing incredible. Like if I shared with you the annual sales there, it would blow you away. But China, our business is actually about 50-50 online versus brick and mortar. And so it's a good indicator, and we learn a lot of things from China about what we can apply to other markets that are still on their path in e-commerce.
I remember before you came, Walmart started pruning down its international exposure. I mean, you feel as though these are the assets that you're going to want to have in the ground?
You can always tweak things, but as we sit here today, we like our footprint internationally. We're in some really good markets, and we provide a lot of value to our customers there. It wasn't until I was in this job, probably about a year, I took a trip to Mexico and visited some of our store formats there, and I went to a bodega. And when you see what we're selling in these stores, like bags of rice that are less than a cup of coffee would cost here, you realize the world needs a Walmart. Like this is where our value proposition shines the most, where you see that need among those customers that just don't have the ability to go spend on higher ticket items.
As you think about Walmart in 2025 and beyond, where do you think a lot of the growth will come from?
Yeah, I think our digital businesses, when we look at our forward projections over the next 3 to 5 years, most of our growth is coming digitally, and that's where most of our operating income is coming, or growth is coming from as well. Even in the most recent quarter, if you look at the increase in operating income year over year, over half of it came from membership income and advertising.
Lastly, too, we're sitting inside this beautiful health and fitness center. I mean, I guess it's not surprising. I know you're a workout buff. That's what we always joke
as
around.
Well.
Yes, I am. But like, did you sign off on this? I mean, this is a huge. This is like a huge expense.
This is actually an incredible facility that we have
It's incredible.
Here. I think any company would be proud to have this kind of facility to offer to their associates and people that have retired from Walmart as well. But this is in the middle of a 350-acre campus. We'll begin moving here next year. We're very proud about it. We're very excited to move here. If you've been to our existing home office, it's a little bit dated.
Oh, it's the OG facility, right? There's no windows in there.
It's very few.
Did you see the cryotherapy?
Yeah.
I got a tour. There's cryotherapy.
I've not seen that yet, really.
Cryotherapy, there's like massage beds, like you put like the boots on your legs.
This is like an Olympic facility for training. It's incredible here.
What do you think, how important is it that people are going to work on this corporate headquarters? And it's not, Walmart is not going to be that remote company.
Yeah, it's really important to us. We know that we work best when we're together. We still want to give the latitude to our associates to have that flexibility when they need to work away, but we're a company that we do business by walking down the hall and popping into someone's office and interacting face to face. We think that's important for the way that we operate.
John David Rainey, good to see you. Congrats on winning the Yahoo Finance Company of the Year award. Not many companies have earned this. So again, congrats. Hell of a year, man.
Thank you, Brian.
All right, appreciate it. Thank you.